Good afternoon, good morning, good evening, everyone, and welcome to Diary of a Trader. This video today we're going to go over Heiken Ashi candles. Heiken Ashi are another form of Japanese candlesticks. Were created by the same gentleman who created normal Japanese candlesticks. And it's important to understand that this candlestick structure is not the same as we would use regular Japanese candlesticks. Heiken Ashi, roughly translated, means average bar. And if you know anything about Japanese analysis, you will know that the idea of balance and equilibrium is a very important component, in not just Japanese technical analysis, but historically in Japanese culture, there is an emphasis placed on finding balance and equilibrium in all things, and that is what we see here. Present on the Heiken Ashi charts. Now, they look like normal charts as far as they look like regular Japanese candlesticks, but they're not. In fact, if we were to do a side-by-side comparison of this is the same chart. So I take that back. That's not the same chart. So we have the Australian dollar, Japanese yen pair here on the left, and I'm going to put that same pair over here on the right. Okay, so regular candlesticks on the right side of the screen, and we have Heiken Ashi on the left side of the screen. Now, it's important to understand that Heiken Ashi was created at a time when there was no such thing really that we used as moving averages, or we didn't use Fibonacci retracements. When these were being used in the Japanese rice markets, in the Dejima Rice Exchange in the late 1700s, predating the Meiji Restoration. They didn't use moving averages back then. So Heiken Ashi was a way to kind of take the Japanese candlestick style and create a sort of moving average. And so you'll notice that on the left side of the screen, there is a somewhat constant and consistent move. And it's kind of a smooth move, I would say. That's the best way to describe it, is that it's a smooth moving average, but it is taking into account price. Now, a regular Japanese candlestick, it is displayed by an open, a high, a low, and a close, OHCL, or some people say close, open, a high, low, call. The same thing is over here, except these candlesticks are constructed by taking the median of the highs and the lows, the opens and the close, and you'll notice that there's something distinct about this chart style. Look at each candlestick on the left, and look at where the next candlestick starts. It seems like it gaps, right? Well, average bar, equilibrium, and balance in Japanese analysis, this is something that it makes perfect sense, is that the next candle will always open in Heiken Ashi. It'll always open in the middle of the body of the prior candle. All right, and as long as we're seeing these candles continue to rise, as long as we're seeing these increased higher lows, as long as we're seeing the trend here continue, that is the direction of the move that hypothetically we should be following and should be trading. Heiken Ashi candlesticks themselves are and this is, I've seen a lot of people do this by accident. Well, I don't know if it's by accident, but what a lot of people will end up doing is they will take a back test, and they will use Heiken Ashi to do a back test, and they will find that it is one of the best performing back tests they have ever seen. And then what they do is they try to auto trade it, or they try to manually or mechanically trade it, and they find that it doesn't work. That's because what is present on the screen, as far as where the marker is at, is not where price is presently at. You're going to notice a difference. So if I were to go down to a faster time frame, a 5-minute chart. You know, where's price trading at? Really, it's trading at 7. Well, we just saw it resolve actually. So you're going to notice that there's going to be a discrepancy between where the Heiken Ashi closes at currently and where price is actually trading. All right, there's going to be a difference. You can see that kind of happen right now, and you can see how dangerous it is to use Heiken Ashi as a chart style that you would use for an entry and an exit. There are different strategies associated with Heiken Ashi, but ultimately what it simply is a trend following tool. That's really all it is. It should not be used to determine entries or exits, but what it should be used is to determine the trend that you're in, and it should warn you of a certain trend change. So one of the big benefits of Heiken Ashi is a situation like this, where you see you have this clear and persistent uptrend, but then when you start to see the Heiken Ashi candles, they start to constrict. They almost look like dojis. That right there, especially when you start to see it round, that right there is a warning that would say, okay, I'm going to pay attention to this, because if price breaks down below, like the low of this right here, let me get a horizontal line and show you. We would say if price is going to break down below that Heiken Ashi low, then I would probably want to consider taking a short trade, because odds are if price breaks down below that low, we're going to start printing some full-bodied candles, which are bearish candles. The inverse of that is true when we start to see a change from a bear trend into a bull trend. If I can find a good example, well, right here actually, you know, you see that there's a substantial move lower, and we see the change in the color of the candle, of the Heiken Ashi candle. That is a good warning sign saying, listen, we might be looking at an uptrend here. So if you couple that in with a normal Japanese candlestick, you're going to get a powerful signal. But ultimately, Heiken Ashi candles, it's, you know, I feel like their usefulness in today's markets and today's trading is more of a distraction for new traders than it is of a benefit. There are much better tools available for you that can help determine a trend, instead of having to have a whole separate chart form to do it. There's really no advantage to using it as far as identifying wave counts and Elliott wave or support and resistance. We do see the same swing structure. I mean, if I were to zoom out like this, you know, unless you really looked closely, you would not be able to tell the difference between which of these is a candlestick chart and which of these is a Heiken Ashi candlestick chart. There's much better ways to identify how trends are going to switch and swap and trade, but again, I think one of the best benefits of Heiken Ashi is visually seeing the changes in the bodies of the candles themselves, especially if you're at some type of swing. For some people, that is a big advantage for them. This is something that you can see maybe a lot easier to determine whether or not that trend is going to continue south like it was before. That's really up to you, but you know, there's other things out there that are much better, much more efficient at determining which trend to trade in than Heiken Ashi. So again, avoid using this in a back test, because you will think you are the best trade system designer in the world. Because I promise you, if you try to trade Heiken Ashi candlesticks with a particular trading system, you're going to get burned pretty quickly. All right. Hopefully you found this video useful, and I look forward to speaking with you in our future videos. Bye-bye.